Morning, everyone. This is Mike Renick. I'm a local real estate broker with Team Renick Real Estate Services. We're part of that great Keller Williams on the Water family. We're here today. We're going to start a new Friday series dealing with insurance. And I have Mike Mailliard from MIC Insurance based here on Longboat Key with us as our guest. Mike will be joining me on Friday mornings going forward, talking about issues and content and things that impact you either as a buyer or a seller. So first of all, Mike, welcome.
Thank you. Nice to see you, Michael.
Glad to have you here. I really appreciate you taking time out of your busy schedule. So when we chatted up front, probably the most pressing issue right now are some of the things happening with flood insurance.
Yes.
So if you would kind of share to our followers, I would appreciate that.
The National Flood Insurance Program seeks funding from the federal government periodically, perhaps every 2 to 5 years. That funding expires next Tuesday, July 31st.
Wow.
Which means that closings that require flood insurance will have to look at a different market other than the federal government plans. Now, this issue at the last time we went around with a lack of funding was really a problem for closings specifically, because the private flood market really did not have traction at that time. They did not have available markets at adequate pricing. So many closings were delayed until the feds could reopen. Today, things are different. The private flood market has matured. Many AM Best A-rated carriers have now moved into insuring flood on the private side at a extremely competitive, if not equal to, perhaps less in a non-coastal flood situation. There are markets clearly that are less priced than the federal government in a coastal sense. So high-risk flood zones, private has become particularly competitive.
So in the past, when we faced a deadline like this with the federal government, it was a significant event.
Yes.
Because it changes now with the private market and other insurance companies offering this.
Yes.
It's not a big event right now. Is that correct?
For me, it's not a big event. I think it's the ability of your agent and agency, what contracts they have with private carriers. Because I am coastal, I really represent all of the private markets. So I do not perceive this lack of funding to be an issue for me at all.
So let me ask you a question. Let's say you were working on a deal for your favorite real estate broker.
Yep.
And we won't name him. But so let's say the closing was due in 2 weeks, and we had lined up to have insurance, flood insurance through the federal government.
Yeah, if we purchased that flood and paid for it 2 weeks ago, there is no impact to this change.
Okay.
So any policies that have been paid for and bound are in effect, or perhaps with a 30-day wait in certain situations with no lender or in a preferred flood zone. The federal plans have a 30-day waiting period before they start to cover. But anything done in advance is golden.
So there's nobody at risk right now for closings in a week or 2 weeks.
Unless they have delayed purchasing that coverage and they are reaching out to an agent who does not have an adequate private market.
So when we look at the private market, that doesn't necessarily take us out of trouble. You and I have had this discussion before. Not all carriers are the same. So
exactly.
It isn't buying flood insurance that's important. It's buying one that if there's a catastrophe,
they have the ability to pay. And let's talk about the private market for a brief moment. Today, the private market is both writing the base flood policy, which is $250,000 maximum of coverage on the dwelling, and a maximum level of coverage of $100,000 on the dwelling contents. The federal flood program always works the same way. It has time frames that dictate both pricing and coverage. The pricing time frame is 6 months and a day. If you live in your property for more than 6 months and a day, or I might say it a different way, if you do not live in another property you own for more than 6 months and a day. So if I lived here for 5 months, I went on a 2-month vacation, I'm still primary because the vacation was not at a home I own. So that client gets a discount based upon being a primary occupant. The hurdle is 50% in a day of the year.
Okay.
Then they have the coverage limit, which nobody talks about. Under the federal flood program, every flood policy sold, if you do not occupy for 80% of the days of the year, and again, I would exclude vacations out of that 80%, then the policy is not replacement cost. it is used depreciated value. So all of our seasonal occupants who live here 3 to 5 months a year, none of their flood policies on the federal side are replacement cost. So then I would ask myself as a consumer, what is the used depreciated value of my 70-year-old house on the Gulf?
Mm-hmm.
And that answer was provided by Hurricane Sandy in the Jersey Shore, where those 75, 85-year-old frame structures were given about 20 cents on the dollar. That's the difference between replacement and actual cash value.
Of course, all the owners at that time, that was a huge shock. That was a surprise.
They were stunned because agents, I believe, do not adequately describe the actual coverages that the flood policy provides. So what I do in response to that is that I would then sell, because most of my coastals are worth more than $250, I would offer an excess flood policy with a very specific contingent secondary occupancy endorsement that changes the excess flood coverage from a follow form, which inherently for a seasonal owner would be used depreciated value,
Mm-hmm.
to its own replacement value coverage. So what does this mean? If I have a house that's big enough, even if it's old, depreciated, I'm still going to get potentially the full $250 of the flood, even if it is actual cash value. But I don't want an actual cash value excess flood policy. So my excess is going to be replacement cost.
That makes sense.
So if my client gets the full $250 on the bottom side, I'm going to have a replacement cost coverage in spite of the federal government's ACV contract.
So here's my understanding of insurance. Surround yourself with experts. As a real estate broker, I'm going to focus on the buy and sell. And then all the other activities, mortgage, inspection, insurance, we surround ourselves with experts. And that's why Mike is here today. We're going to be coming at you every Friday morning talking about more issues as they pertain to buyers and sellers. But I think we've learned this morning how complex this is and how easy it is to fall short. And we as an owner don't realize we're short of coverage until it's too late.
That's right.
You have to surround yourself with the best of the best. That's why Mike is part of the extended team. He does an amazing job for our clients and hundreds and hundreds of other clients that aren't ours. But it's this kind of knowledge that we need to be able to bring to people. So if you have questions or comments, we'll be back every Friday morning, but feel free to reach out. Mike, can you share your office number?
941-554-8909.
And I'll put this up when this gets published too, with his email address, his office number. Of course, you can reach me 7 days a week. My name is Mike Renick. I'm with Keller Williams on the Water. I'll give you my personal cell so you don't have to go through the office system. It's 941-400-8735. We're dedicated to bringing you the information so you can be the most effective buyer or seller either today or sometime in the future when it's right for you. If you have any questions, feel free to reach out. You will not get pressure to buy or sell. We move forward at your pace. And if we can answer your questions, then we consider that a success and a home run. And that's how we built this team. That's how we built this company. And that's the Keller Williams way. Thanks, everybody. Take care. Have a great weekend.
Very good.
Great video.